What if I told you that the next major stock market crash, and I believe one is coming, won't destroy my portfolio? What if the very event that wipes out millions of traditional investors actually validates the core reason I hold the majority of my crypto in XRP? That's not wishful thinking. That's a thesis I've spent a long time building. And today, I'm going to walk you through every piece of it: the macro trigger, the infrastructure play, and exactly why my portfolio looks nothing like what most crypto influencers tell you to build. This might be the most important portfolio video I've made. Let's get into it. Welcome back to Crypto Investment Group. I'm going to be unusually direct in this video. I'm not going to show you a perfectly balanced pie chart and pretend I'm playing it safe. My portfolio is concentrated. It's built around a specific macro thesis. And if that thesis is right, the upside is significant. If it's wrong, I own that risk completely. Here's what we're covering today: the Japan carry trade unwind and why I think it triggers a global sell-off. Why that crash scenario actually needs XRP to function. How XLM, XDC, and HBAR fit into the bigger picture, and how I size and manage this kind of high-conviction portfolio responsibly. Disclaimer: everything in this video is my personal opinion and reflects my own investment thesis. This is not financial advice. Concentrated, thesis-driven portfolios carry serious risk of loss. Please do your own research. To understand why I hold what I hold, you first have to understand a financial mechanism most people have never heard of: the yen carry trade. Here's how it works. For decades, Japan has kept interest rates near zero. Global investors, hedge funds, banks, institutions, borrowed massive amounts of yen at almost no cost, then converted that money into higher-yielding assets: U.S. equities, bonds, emerging markets, tech stocks. It's essentially free leverage on a global scale. Here's the problem: Japan cannot keep rates near zero forever. Inflation is rising. The yen has been under pressure. The Bank of Japan is being forced, slowly, reluctantly, to raise rates. And when they do meaningfully, that carry trade unwinds. What does that look like? Institutions have to sell their global assets, fast, to buy yen back and repay those loans. We're talking trillions of dollars in forced selling. U.S. stocks, global equities, everything. Not because the companies are bad, not because earnings collapsed, but because the plumbing of global finance is being unwound at scale. My estimate? A 30% or greater drawdown in global equities. Fast, disorderly. And the existing financial infrastructure, built for normal trading volumes, will be under enormous stress. Key point: this isn't a doom prediction for its own sake. It's the setup for why settlement infrastructure becomes critical, and why that's where XRP enters the picture. Now, here's where my thesis gets specific, and where most people haven't connected the dots. When a market sell-off happens at that scale and speed, the existing settlement systems get overwhelmed. The DTCC, the organization that settles most U.S. stock trades, currently operates on a T+1 cycle. That means trades settle the next business day. In a fast, high-volume crash, that lag creates enormous counterparty risk. Who owes what to whom? Where's the liquidity? Can the system keep up? XRP settles transactions in 3 to 5 seconds. The cost per transaction is a fraction of a cent. It can handle 1,500 transactions per second on the base layer, with capacity to scale. It is ISO 20022 compliant, which is the global financial messaging standard that major banks and payment systems are migrating to right now. Ripple already has relationships with hundreds of financial institutions globally, and already has legal clarity even without the Clarity Act passing. The infrastructure isn't theoretical, it exists. The question in my thesis is simply, when the legacy system is under maximum stress, does the financial world reach for the tool that can handle real-time, high-volume, low-cost settlement? I believe the answer is yes. And I believe XRP is positioned to be that tool, not just for crypto transactions, but as the bridge asset for global financial settlement during exactly the kind of liquidity crisis this carry trade unwind would create. My remaining allocation isn't random altcoins. Every position I hold outside of XRP is there because it fits the same broader thesis, a new global monetary infrastructure being built in real time. Let me walk through each one. Stellar, XLM, cross-border payments and financial inclusion. Stellar was built specifically for fast, low-cost cross-border transactions and remittances. It's backed by the Stellar Development Foundation and has partnerships with major payment processors and NGOs. Where XRP targets institutional banking corridors, XLM focuses on emerging markets and the unbanked. In a global monetary reset, both lanes matter. XLM is the retail and remittance layer of the same story. XDC Network, XDC. Trade finance on the blockchain. XDC targets trade finance, letters of credit, invoice factoring, supply chain financing. This is a $9 trillion market that still runs largely on paper and legacy systems. XDC digitizes and tokenizes real-world trade assets. If the new global monetary system needs to handle actual commerce, not just speculation, trade finance infrastructure is essential. XDC is building exactly that. Hedera Hashgraph, HBAR, enterprise-grade distributed ledger. HBAR is different from most crypto projects. It's governed by a council of global enterprises, Google, IBM, Boeing, Deutsche Telekom among them. It uses a hashgraph consensus mechanism that is fast, fair, and secure. Major enterprises piloting tokenization of real-world assets, central bank digital currency infrastructure, and supply chain tracking are looking at Hedera. This is institutional-grade infrastructure. That's why it's in my portfolio. Taken together, these four assets, XRP, XLM, XDC, HBAR, aren't a diversified basket in the traditional sense. They're a concentrated bet on one idea, that the global financial system is being rebuilt, and utility-first tokens with real infrastructure and real institutional adoption will be at the center of it. Let me bring this together. I hold the majority of my crypto in XRP because I believe a Japan carry trade unwind triggers a global market crash. And in that crash, real-time settlement infrastructure doesn't become less important, it becomes critical. XRP is positioned to be that infrastructure. XLM, XDC, and HBAR round out the portfolio because they're not speculative bets. They're utility assets building the rails of a new global monetary system. Each one has a specific job in that system. This is a high-conviction, concentrated position. It is not for everyone. But for those who've done the research and share the thesis, it's a portfolio built with intention, not hope. If this kind of macro-driven analysis is useful to you, subscribe and hit the bell. I'll be doing more videos on these topics and more. Drop a comment below. Do you share this thesis? Where do you disagree? I genuinely want to hear your thinking.